Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Now, the most popular technical tools, they're simple yet lagging indicators, and they're most used by the masses. They are moving averages, and many of the moving averages, because they are the top of the list here, many of these moving averages are based on the close. Now, I just kind of showed you or given you an eye-opener that you don't have to use a moving average based on the close. Other forms of technical indicators which are lagging are Bollinger Bands, even stochastics, MACD. These are the most popular by far indicators that traders are using today, and volume studies, and of course tick and trend, advanced declines, and there are other indicators out there that do show us strength like on balance volume, and we can go on and on and on. But I wanted to just give you the top listing of many of the more popular indicators out there and what they can do for you and what to look for, and also what to avoid when using these indicators. So we also have at our disposal some of the more complex yet powerful predictive indicators, which is used least by the masses. And if you notice how I've broken this down, if 80 to 90% of the people that lose in the markets are all using these top forms of market analysis, if the few of the people are using the predictive indicators, there's probably something to that as well. Elliott Wave, Fibonacci, many has become more and more popular, and pure price analysis, something that I'll get into a little bit today with you, as well as pivot point analysis, which we've talked about many times in the past. Now, for trading techniques, for understanding and uncovering direction of the market, it can help us to not only use a moving average, which is a floating trend line in essence. We can also look at simple trend line analysis to determine if the market price is in a trend moving up, sideways, or down. We also want to look at condition. You could look at fundamental leadership, technical analysis using candle patterns, candlesticks. We can look at the condition of the markets by examining not only the pattern of price, higher high, higher low, but we can examine the color of the candles. Are there more red colored candles, which signify that markets close below open? Generally speaking, if a market is bullish, you see much more green candles in an uptrend than red. So we'll be able to determine, really, is there strength in the market by not just the size and the shape of the candles, but also the colors. The relationship, which is very important in understanding the condition of the market, the relationship of the close to highs or lows. Is the uptrend, if there is an uptrend we're talking about right now, an uptrend in the market, for example, what is the condition? Is it a late phase, early stage? Is it starting to weaken? Are we starting to see the close back closer to the lows? It's not maintaining closes closer to the highs. To me, in an uptrend that's lasted a while, if we start to see closes that are backing off the highs, to me, that's starting to show a weakening bullish condition. So there's a couple things that we can so far look at without even getting into technical indicators by just looking at pure price action, looking at the direction, looking at the condition, and of course look at the health of the market. What's the volume, the length of the move? Is it a beginning phase, the ending phase? Has it lasted a long time? What is its current phase of the market? Understand where the market is in relationship to longer predicted support and resistance levels. That could be, if we're taking a look at a foreign currency or against the U.S. dollar, how long has the market been in a current trend? What are the fundamentals? What is the fundamental leadership? Is there more talk about the U.S. raising rates and, say, our European counterparts not? If that's the case, then obviously interest rate differentials would favor U.S. dollar and would bring about more euro currency weakness. And that's what you have to relate to when trading and making decisions. I would have to say that I'm not a pure technician. I do follow what some of the fundamental events are taking place, and I think it's important. And so in trading, understand direction, condition, and health is very important when we're putting together a trading plan and understanding what indicators would best suit us to take measurements or give us identifications to those three conditional states. Now, how do we identify a quality setup? Once we've identified that prices are possibly at or near a resistance level, the key is identifying when the market is going to roll over. In other words, move lower. If we feel that the trend has exhausted itself, we want to identify when and where is a reversal likely to occur. Most people say, hey, person, that's impossible to predict a turning point in the market. And I have to say, no, it's impossible to be a fortune teller 100% of the time, but we can make a predetermined prediction. After all, folks, if you look at a chart, we have two axes on that chart tablet that we have to look at. That's actually two elements that compose a chart. What are they? Time and price. So when I say where and when, I'm actually stating what price and what time would we look for a reversal to occur. For me, I look at seasonal tendencies of the marketplace for longer-term supply-demand shifts in the marketplace. After all, we do have a lot of fundamental events that take place that can alter a short-term trend in the market that can help make a price reversal. We have end of quarters, right? And if we see a market that's been in a long-standing trend, a lot of times we'll see a interim reversal in the marketplace. If this makes sense to you real quick, let's take an example on the U.S. dollar versus the euro currency. The euro currency has been bearish against the U.S. dollar. So in essence, we have seen on the EUI, which is the ISE's euro currency index, we've seen that market move higher. So when the euro currency versus the dollar goes down, the dollar-euro index goes up. So if this is true, here's a scenario. If everyone's been in the long side of the dollar, the short side of the euro, and we're coming close, and it's been in a long-term trend, at least we've seen the market move since early December in this trend direction. All of a sudden, we get a little bit of market movement against us in the beginning of January, and all of a sudden, that trend continues. It's now getting closer to the end of the first quarter, correct? I mean, where are we right now in a quarter cycle? We're coming close to the end of a quarter, correct? Now, let's just put one and one together here. There are funds out there who are trend-following system traders, and they get paid by following the trend and trading with the trend. Interestingly enough, these folks get paid by performance. Again, they're not weathermen. They get paid by making money for themselves and their clients. And in order to take money off the table, if you are long something, you have to sell to get out. And that selling pressure, we call profit taking, does take place close to end of quarter. So you do see quarterly adjustments in some markets, especially significant trending markets. And I think right at this point in time, I'm talking about the euro because we're actually coming up to that scenario right now where the general public and the small speculators and the large funds have been heavily short the euro currency. And guess what? They're probably going to want to be taking some of that money off the table, causing a market short-term interim reversal in prices. So it's up to us to say, okay, we've got the win. It's soon. We don't have the exact minute that they're going to notify us. I don't get those particular emails. I'm sure you don't as well. But think of it this way. If both small speculators and large funds are short a market, who do you think gets out of winning trades first? Is it the small speculator or is it the large hedge fund and CTAs and professional traders? You got it. It's the professional traders.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.